It also depends on what the rand does. So if the rand weakens, that's good for Merafe because they're making money in dollars and they're paying costs in rands. I picked them for the competition because I think they undervalued compared to other food producers. So they're undervalued compared to an AVI or a Tiger Brands, and they're quite small. So my hope is that somebody comes along and actually buys them out.
Hello everyone, welcome back to another FInMeUp episode. We are here with Charl Botha, one of the FInMeUp mentors, a person I love following and love reading his content. He is a well-known writer. Maybe you don't know his face, but you've probably read one of his articles. So quite keen to learn more about his stock picks today and overall just more about him. So he also made the commitment to me to post a lot on the FInMeUp app this year. So looking forward to all of that content, education and insights. So we're going to look at his top 5 JSE picks for this year. Charl, welcome. Before we get into the picks, just something you want to say about them?
Firstly, thanks for having me. It's a pleasure to be here, and hopefully I do, keep my promises this year, writing more for the community. And yeah, so the 5 picks I've picked is Merafe, Sasol, Lipstar, Gemfields, and Pan African Resources. So just a bit of background, in my own portfolio, I only own 2 of these 5 shares. Now you might ask, okay, why pick 3 shares that's not in your portfolio? And my answer is, in these types of competitions, what you want to do is, if you want to win, you need to have shares that's going to shoot the lights out. And so either companies that are almost going bust, but a little bit of good news gets them, back to life, or companies with a lot of debt, or companies, commodity companies, especially in South Africa, smaller companies and things like that. So what I'm going for is, in my regular portfolio, my own portfolio, I want to do 15% a year if I can, but consistently, and year, if I want to win or get close to the top, I either need to do minus 20 or hopefully plus 50. So that's why I picked these shares. So if you're doing a competition like this and you want to win, go big or go. And these are my 5, which I think can do some good things.
Cool. So as Charl said, he owns 2 out of 5. So just always remember, this is not financial advice. You can get insights from this. You can learn from this. You can explore new companies, but always do your own research. So let's get into your 5 picks. And your first pick is Pan African Resources. For those who are listening and haven't joined the FInMeUp Stock Pick Challenge, the link is in the description. You can choose your 5 stocks and win prizes at the end of the year. So you can join any time at the year, but the sooner you start, the better, because time is of essence. So you can join the competition. Link is in the description. It's free to join. Join the community. Download the FInMeUp app for more insights and to get other mentors and their stock picks like Anthony Clark, like myself, like Soul Financial, Josh for more. So Pan African Resources, Charl, why?
Yeah, so just quickly, the 2 I own is Sasol and Pan African. So I love Pan African. It's probably the best run gold miner on the JSE. They're also smaller than all the other gold plays. So, smaller companies can easily go 50% up or 100% up. They can easily get bigger than big companies. The second thing I like is they've got very little debt, which means they're not in such danger if the gold price drops. And they also mine gold right in the middle of the cost curve. So they're not very expensive. They don't take gold out at 1,800 an ounce. They also don't do it at 700 Rand an ounce. They're about the world average, 1,250. So yes, I like them for those reasons, and nice rand hedge. And they're also one of the very few gold companies that actually pays a consistent dividend.
Interesting, and I mean the gold price isn't looking too bad at the moment. So let's keep an eye on Pan African Resources. Your second pick, also commodity, also something you've covered on the FInMeUp app, and that is Merafe Resources.
So Merafe is a play on China. So Merafe does something, sends something called ferrochrome and chrome to China. Now, what is ferrochrome? Ferrochrome is used to make stainless steel. So it takes normal iron, you add ferrochrome, all the the chromey things and everything stainless steel, ferrochrome is in there. And Merafi is actually one of the biggest producers of that in the world. So in other words, if China, the Chinese people buy fridges, cars, do fancy construction, things like that, the ferrochrome price should do well. And that should come through in the Merafi share price as well. And I think that will happen this year because, or the chances are better than 50-50 because the Chinese want to get the economy back on the road after this whole COVID. We're already seeing signs of that.
And what is your opinion on their valuation at current levels?
So just quick backtrack. I think Pan-African is about 360 now. I think Pan-African can easily go to 5. So just putting that there. Merafi is about 135 or 38, I think, at the moment. If the ferrochrome price rises 10, 20, 30%, Merafi is very sensitive to that price rise. And so we should see Merafi can even go to 2 rand quite easily. It also depends on what the rand does. So if the rand weakens, that's good for Merafi because they're making money in dollars and they're paying costs in rands. The one risk with Merafi, and it's a big risk, is electricity. So they're actually one of the biggest electricity users in South Africa. So a lot of people will probably think, okay, let's shut down their smelters. Interestingly, if we shut down their smelters, it will probably be 1 or 2 levels of load shedding.
Very interesting. Your next pick is not resources, but commodity to some extent. And this is something many of our people in South Africa love, and that's, they service to Woolies, if I'm not mistaken. And that company is called Libstar. Why did you choose Libstar?
Yes, Libstar is more, look, I think we're going to have stress in the consumer environment, except Woolies, the Woolies LSM, so in other words, the Woolies earnings, the people that shop at Woolies, they're not as sensitive as other consumers. And ready meals, it's easy, it's convenient. So I think that's a solid business. They're making inroads. They also do Lancewood. So Libstar's all Lancewood cheeses. I think they're making some inroads there. Finally, I think that would spices business now. So they're diversifying nicely, but it's not. I picked them for the competition because I think they undervalued compared to other food producers. So they're undervalued compared to an AVI or a Tiger Brands, and they're quite small. So my hope is that somebody comes along and actually buys them out because I think they're ripe for the taking.
Very possible on the JSE. We've seen quite a few acquisitions the past few years. Speaking about the past few years, your next pick made a lot of people a lot of money the past few years, and that is Sasol. Why did you choose it for this year as well?
Yeah, so Sasol, if you can say where the rand oil prices go, you will do well in Sasol. Now, I don't have any idea where it is going, but what we're seeing is, I think, a global massive psychological push against fossil fuels. And what I think people underestimate is how pervasive fossil fuels are in our lives. Fossil fuels aren't going anywhere anytime soon. It's going to be a decade-long transition. And what's happening is because people are so anti-fossil fuels, the fossil fuel companies are being starved of capital, investment capital. So it means they're not putting that capital to work to open new oil wells and things like that. The world produces about 100 million barrels, uses about 100 million barrels of oil a day. Now, if the world doesn't invest, we lose about 5 million barrels of oil per year, I think the latest figures. So just to replace that, they need to find 5 million barrels somewhere. From things I've read, we're not growing that, and we're going to see this many countries like India and even China where billions of people still live below the level where you've got cars and things. So my feeling is we'll see higher oil prices for longer, and if we do that, Sasol will fly.
Interesting. So getting to your last pick, and before we do, this is actually a a company I really want to know more about. I nibbled a bit. I bought a little bit for a few reasons, but keen to learn your reasons. And I know Charl is also, for those watching, he's also a big fan of Santova and Coop Agri. As you'll know, those two are part of my personal top 5 picks. By the way, my top 5 picks for this year is available on the FInMeUp app. You can just download the app, search Higgo for Million, or scroll down and look for it. But since he's also a big fan of Santova and Coop Agri, hopefully in the near future we will have him back and talk about those two on this channel. So make sure you subscribe to not miss that as well. Getting to your final pick, Gemfields. Why Gemfields?
So Gemfields does 2 things. So they mine gemstones. We're going to get to that soon. And they also own the Fabergé brand. Now, the Fabergé brand is those beautiful Russian eggs that's like made out of gold, and the Tsars and everybody used to use them or have them as jewelry in their palaces. Maybe with Russia now, people aren't so keen on that. But that's a very small business. It's not my reason why I'm going for Gemfields this year. So coming back to the gems, Gemfields has, I think, not sure, but one of the world's biggest emerald mines and one of the biggest ruby mines in the world. So emeralds are the green gemstones, and rubies the red ones. And the one mine is in Zambia. I'm not sure if it's the emeralds one or the rubies one. I always mix them up. And the other one's in northern Mozambique. Now, if you compare what this company makes to what its market cap is, it's very lowly rated. But I think there's a very good reason for it, because the one mine is, like I said, in northern Mozambique, and if you're reading the news, you will know that there's a massive insurgency by Islamic, almost like ISIS. They call something else, I can't remember now. But they in northern Mozambique and operating there. And they actually, at a stage last year, they came to within 30 kilometers of this mine. And the Mozambican government forces pushing them back for now. But yeah, you can easily imagine a situation where these guys come and they, overtake the mine or take the mine or be in the area so that people can't mine. And that's obviously big. If you're going to have 30-40% of your revenue and earnings dropping out of the equation, you can easily see the price drop far. But if that doesn't happen and they continue to sell the gems at the recent prices they have, this price should fly. And also, one other thing is, I think gemstones are becoming becoming a bit of fashion again. So you've got three big gemstones, your sapphires, those beautiful blue ones and the green ones. And I think as the world becomes richer, especially in India and China, your marginal demand for these precious stones will push up the prices, and I think we're already seeing that. We're really achieving record prices for their gemstones.
Interesting, and I know their cash balance is actually almost their entire market cap. So definitely, not overvalued, but as you mentioned, there are those risks. So this is a wait and see scenario. If it doesn't happen and everything goes well, you will see good returns, but because it's the future, it's uncertain. But definitely a company to watch. Charl, thanks so much for those picks. If you made it till the end, thank you for watching. Consider liking and subscribing so you don't miss the rest, and watch the links, look at the links in the description. Maybe something finds your eye. Join the Stock Pick Challenge, download the FInMeUp app, play the quizzes, bring your friends, and thank you for watching. Charl, thanks so much.
Thank you very much.